Good morning, everyone, and actually good afternoon, excuse me, and welcome to our Meet the VC with Allen Bryant of Knightsgate Ventures. We are so happy to have all of you on today. And just a couple quick things as we get started. This webinar will run about 40 to 60 minutes, depending on our question and answer. Feel free to ask your questions anytime using the question and answer panel, and feel free to use the chat to talk to us or to everyone. In fact, right now, if you'd like, please drop the name of your company, a one-sentence description, where you're calling in from, kind of get that chat going so we can start the engagement. And please know that if at any point you do have to hop off early or you need another engagement, this is being recorded on YouTube. So we will send those YouTube links, as well as give a reminder afterwards if you'd like to share with anyone else. As most of you know, Early Growth is your strategic partner, leading your finances and accounting so you can focus on your business and customer teams. Our motto at Early Growth is "Together we can grow." Here you can see what we do. We're the largest national firm in the venture capital space and your resource for everything startup, from finance, accounting, taxes, equity management, fund accounting, HR. We are here to service you. And now with our merger with Escalon, we can do it at an even grander level. Again, this is my favorite slide because I love that motto. It isn't our first rodeo. For over 10 years, Early Growth has helped thousands of startups from your first round of funding to your exit. We're there every step of the way. And much like you can't do it without us, we hope, we can't do it without our amazing partners, some of which we would like to thank today. And to do that, I'm going to pass it over to our moderator, Phil Rader. Phil has been at Early Growth for 2 years. He spent 3 years running deal organization for a low middle market private equity firm. He spent his career working in and around the private capital markets, and his true joy comes from meeting new founders, understanding their stage growth, industry, and connecting them to the right resource with their ecosystem. And today I'd also like to thank our partners, Fenwick, Rho Business Banking, Chainstarters, and TriNet. And with that, I'm going to pass it over to Phil and welcome him back on. So Phil, take it away.
Hello, everyone, and thank you for the introduction, Gina. I guess first, let's start off ladies first. I'd like to introduce Julie Dwyer from Chainstarters and give a little bit of background of what they provide for the ecosystem.
Will do. Thanks, Phil. My name is Julie Dwyer. I am the COO of Chainstarters. We are a platform as a service that is transforming how developers build and scale web and mobile apps. Our patent pending platform empowers developers to create the best technology they can faster by providing a secure and scalable foundation. It comes pre-configured with dozens of resources, tools, and systems that carry the infrastructure burden and remove the need for backend DevOps. So basically, we give developers the freedom to innovate.
Thank you, Julie, and appreciate you being here today. I pass the torch next on to Jason Grochowski from Rho Bank.
Hey, Phil, thanks for having me here. So yeah, Jason Grochowski with Rho. We are a full service commercial banking platform, but fully digital. We do everything from core banking to corporate cards for, extending credit to companies to allow them to grow and scale on top of accounts payable, expense management, and we have a full service capital markets team. So any companies that are trying to figure out how to raise debt, whether that's venture debt, term loans, PL financing, inventory financing, we're a full-scale partner to really help small companies up to companies that are doing hundreds of millions in revenue. So super excited to be here.
Thanks, Jason. I appreciate you being here as well. And last but not least, as I know, Fenwick, obviously a full-scale international law firm, and I had a little difficulty with getting here today, but always loves promoting and supporting these events in our community. But I'd love to introduce Carl Eppers on behalf of TriNet and what he does for the Northeast community.
You're on mute, Carl.
Love that. We're about 1 year into this and I'm still on mute. I love it. That's amazing. In any event, a really good event here. Carl with TriNet providing back office HR infrastructure, Fortune 100 level benefits. But overall, I'm just here to help the VC community and the startup community, particularly in the Northeast and New York area. But Phil's great. He does an amazing job here with the Meet the VC events, and we have a really good one here. So everybody should be super excited about it.
Thanks, Carl. Appreciate that. And really excited to really introduce Allen Bryant, kind of the star of today's show, and Knightsgate Ventures. So Allen, if you want to give us a little background on yourself and really kind of what led you to the role you're in now.
Absolutely. Really excited to be here. Thank you, Phil. Thank you, Gina, for hosting this, and looking forward to diving in. So as Phil mentioned, my name is Allen Bryant. I'm a partner at Knightsgate Ventures. Knightsgate Ventures is a pre-seed and seed stage venture capital firm. And we write checks typically anywhere from 200K to 500K in those rounds. And the idea is we're looking for technology platforms that will inherently drive some positive social outcome as they grow. So you think about, just about any industry you can think of is shifting towards more social responsibility, whether that's transparency, sustainability. You think about climate change, obviously very top of mind right now, financial inclusion, and we really are looking to accelerate those trends towards more social responsibility. So we think we have play a very important part of that ecosystem. So you think about these businesses very early stage, right? Could have one founder, could have a team of 5 to 10, typically. On the lower end of that, but we feel like we can really add value and help them really change the trajectory that they would be on. Quickly on my background, so I started my career at Credit Suisse in the consumer and retail group, to focus on very large cap consumer and retail, typically CPG companies. Transitioned to a middle market private equity firm called Palladium Equity Partners. And while I was there, I actually had an opportunity to work with a really fantastic organization called the Resolution Project. And the general concept is you have someone like myself that has some work experience. You partner with typically a student that has a social venture and really just help them get off the ground with this social venture and ultimately get funding as well. So we helped a young lady named Chantel, who's originally from Zimbabwe, bring preschool, affordable preschool to Zimbabwe. There was an issue with essentially students were not allowed to enroll in the public education system without first going to preschool, which was not publicly offered. It's very expensive, and you could see the issue, right? Folks would not go to preschool and then couldn't enroll in the public education system. So what we did was we stepped in, brought some schools in with this initial capital. And what we quickly learned was the impact you can have is much, much higher if you have a self-sustaining business, right? So you have your parents, your students helping out in terms of, you have side projects and anything they can do to help out to bring in some revenue, offset your costs. And you can have a school that's not only around for a year, but maybe, 10 years, and you can open more schools. So we've opened 3 schools now that have been in operation for a few years. And just that multiple or the multiplier effect that you can have just really stuck with me. And that's ultimately what drove me to join Knightsgate Ventures. And I think that's the high level background.
Well, I appreciate it. And obviously, I really love the philanthropy. I was involved myself growing up. Won't get into those childhood stories and different things I did with the ALS Association. Brothers really involved in JDRF. But definitely love the philanthropy and social responsibility aspect. And I guess diving into that a little bit more, you talked about your check size, kind of the overall that part of it, but really diving into maybe certain industries that you tend to focus on. And then maybe a little bit for the other founders on this call, kind of the valuation ranges and things that you're looking for in that pre-seed seed round. As we all know, those terms and lines are always getting blended no matter where you're at or what you're raising.
Yeah, absolutely. So we've really focused on, I guess, 3 or 4 verticals, if you will, or sectors: education tech, financial tech, and call it marketplaces. We are starting to look a little bit more at healthcare, just because we think there's a huge opportunity there, and a little bit more at call it climate tech. But again, we really have focused on the 3 areas that I mentioned to date. In terms of valuations, so something that I've noticed recently is the pre-seed, seed, whatever you want to call these rounds. It's all just names, right? So what used to be a Series A is maybe a seed round now. Everything is kind of being pulled forward, but we really look to have a 3 to 5% ownership in the businesses that we invest in. So anywhere from a valuation of 5 million to up to 20 million is kind of our sweet spot and where we want to get involved. And again, part of that is we want to be a meaningful enough owner to add value and be able to continue participating as these businesses grow. And I think where we really specialize is helping these businesses very early on and getting them to a Series A, and then kind of those folks can then help these businesses from there. But our job in our minds is really to get these businesses to that next stage.
Understood. And it's not like you go away, but at the same time, it's that everyone kind of has the time set and specialty of resources they can bring as you're kind of going through those multiple rounds. I guess for you personally, I guess a little bit on anything about you that you'd suggest if a founder is trying to pitch you, like ways that you prefer to be contacted. Are you open to cold outreach, or do you prefer, another VC bringing you in, or another person in the ecosystem? Just a little bit more kind of about your background and how you prefer people reach out to you in the firm about a potential opportunity.
Yeah, that's a great question. So I would like to say that I accept cold outreach and I do the best I can. It's just ultimately it's very tough to take everything that I see and have a meeting with everyone I see. So really we have kind of criteria that we check off and make sure that we're not wasting the founder's time, not wasting our time. Ultimately, a warm intro is certainly the best. A lot of times we get introductions through Series A or later stage investors that say, love this business, love this industry. It's too early for us right now. But you guys take a look. If you like it, we'd love to take a look in 12 to 18 months. Those are probably our favorite, just because you have kind of the next round of capital in sight. But just from my standpoint, in terms of, I really look for genuineness in founders and transparency, folks doing this for the right reason. So you think about, my background, I transitioned from these roles that I mentioned to the role I'm at right now, just to have the impact that I believe we can have. And I really do want to see that in the folks that we partner with. You're doing it for the right reason. This is something you're passionate about, and you're really the person to solve the issue that this business is going to solve, right? So I'd say that's kind of the main things I look for and hope for, I guess.
Love it. And I guess from that as well, walk us through, I'm really curious on how your firm kind of goes through their decision-making process. Not, as you start to engage, have that first phone call, how do you approve the eventual investments that you make? Kind of that internal process that you work on as a team.
Yeah, absolutely. So we are, I think, a bit unique in that we actually make an investment memo for each of the businesses that we invest in. So you think about the typical, founder background, industry background, what's the issue that they're trying to address, how large is that market, thinking about the competitive landscape. And as you're doing all this, this is obviously part of our diligence. As you're answering these questions, you really get to see, is this a viable opportunity? Does everything kind of add up? And does this have the ability to really take off and get to where we want it to be? So in terms of, the process is typically we'd have a couple calls, get into a data room, and then really fill out that investment memo, talk internally, and then we would have kind of an informal investment committee where we would have a go, no go. Typically it varies based on where these businesses are at in their own fundraise and when they're closing their fundraise, et cetera, and I guess how much interest there is, right? But typically we want to get back to founders within a week or two, and basically say, we like this, we want to dig in with a high probability, or let's hold off for now and want to be respectful of everyone's time.
Understood. And I guess my follow-up to that would be understanding, does that differ a little bit if you're maybe coming in as, not leading the round versus leading the round? The size of the check that you're there, if you're coming in the seed or the pre-seed, kind of walk us through the difference in those two scenarios.
Yeah, absolutely. So we try to keep it relatively consistent, regardless of obviously if we're leading versus not leading. That would be kind of the biggest variance between processes. Just given we would come up with the terms and get other folks to come along. But otherwise, we really do want to keep a consistent process. I think we'll write checks anywhere from 100K to 500K. Is kind of our sweet spot, but within that range, there's no real difference for us in terms of process.
Understood. And I guess when, say, you go through that process and it is a no-go for whatever reason it may be, or not for now, what's kind of your process and kind of follow up with these founders? Do they usually ask for feedback for why? Do you a lot of times maybe put them to someone that would be a better fit based on thesis? Kind of how does that process go? Because obviously the yes, everyone's happy and you're riding off into the sunset, at least for that round. But for curious just kind of how that process goes. If it is a no for now, kind of the feedback you give these founders to help journey them into the next round or toward another more appropriate partner.
Yeah, it's a great question. So we're all about being transparent, and if it's not going to work out, we want to let the founders know as soon as possible, and that obviously helps with their process. We do have a lot of other venture firms in our network that if there is, maybe if this was outside of our wheelhouse in terms of industry or stage, we could certainly pass or make introductions as appropriate. But it is really, keep us in the loop, and we can be helpful where we can. But it's really just being respectful of the founder's time. Fundraising processes are very time intensive, and we want to be as respectful of that as possible is really what it comes down to.
Yeah, and I love that you mentioned that, because I think that the founders have to have the same respect of the VCs because they also fundraise. And they're doing the same thing you are at slightly higher level, at least in capital, but dealing with the same processes, frustrations of getting the round closed, going through multiple closes, and dealing with the pushback from the investors or whatever it may be in that process. So it's not like you don't have the same exact journeys. It's just a little slightly different from LPs to VCs. But a question here we have from Bemsy is about, do you provide any help with making the first big sale? Kind of just can dive into that one, but also kind of wanted to say, I guess as you're answering that, is there any area you think that your firm adds a unique or just disproportionate value alongside the capital for these founders?
Yeah, absolutely. So my understanding of the question is, would we, and the initial question from the chat, I believe, is, would we help with finding that first customer? So I'll answer that, and more broadly, what I believe our value add is. But really, I mean, we're just very hands-on investors. You think about these businesses are so early stage. Just thinking about, if you need to make a model, we're here to help, right? We have models we've used, we've developed for our companies. We had one business in particular that at the start of COVID started bringing in PPE to the US, and just absolutely took off from a revenue standpoint, but then ran into network and capital issues. They were obviously very tied up with everything going on. So we actually ran a network and capital financing process for them to ensure they could bring in everything. We've helped folks with bringing in new hires, kind of as a final interview or just check in to make sure that we think this is a correct fit. So it's really anything a business needs that we feel like we can provide. We do want to provide. So we have bi-weekly calls with all of our portfolio companies, and really the question is what's going well, what's going not well, and what can we do to be helpful with what's going not well. So it is quite ad hoc and varies business to business, but we really do pride ourselves on rolling up our sleeves and doing what needs to be done.
And at the stage you're investing with those core key hires and small teams, I assume you're pretty hands-on.
Yeah, absolutely. Yep. And look, I think one of the things we look for in founders is just that passion and that willingness to run through a brick wall, if you will, and we'll run through the brick wall with you.
Love it. I guess we had a question here as well about investing in solo founders versus teams or pairs of founders, if that's kind of been a roadblock for the investment committee.
Yeah, it's a great question. So we don't necessarily delineate or think about it as a particular pro or con. We really look at the founder and their background and what they bring to the table. So in short, I mean, I've seen data points on, I believe two founders is technically the highest hit rate, right? But from our standpoint, I mean, we've invested in the majority, I would say about 60 to 70% of the businesses we've invested in are a solo founder, and then the rest are two founding members. So it really does not make a difference to us as long as we believe in that founder or we believe in that team.
And that probably adds up a lot to why you're part of the key hiring process around, filling in where the core competencies they cover in the other areas of the team, either outsourced or in-house, that they need to kind of well-round as they're building out from that pre-seed, seed through and beyond.
Absolutely.
I guess not to, have to go the other way, but maybe what would entrepreneurs maybe like least about your evaluation or due diligence process, if anything, that you've gotten feedback on? So a little bit of vulnerability here.
Yeah, that's a great question. So I would say, I mean, we've had some I don't want to say horror stories, but some really tough experiences with our portfolio companies as they raise Series A's. And just hearing that, and we have several advisors who are long-time entrepreneurs, have started several businesses and obviously gone through fundraising processes themselves. We are hyper aware of how difficult this is. So, I mean, candidly, we think about the founder and the management team and everything we do, and try to ask as few questions as we need to get to the answers, and not send over a huge diligence request list, or talk to every customer, every supplier. We really think that, especially at this early stage, we can get a good sense of what the business is capable of, what the management team is capable of, without a lot of that. And candidly, there's not a ton to diligence at this stage, right? It's from a financial standpoint, right? I come from the private equity world. You know, we're not throwing together these intricate models with cases, and it's really, do we believe in what this founder is capable of? Are we willing to help them get there? And you know, recognizing that there obviously will be pivots and roadblocks, but I think it's really just betting on these founders and the visions that they have.
Gotcha. So from, I guess, that snippet right there, I'm guessing that kind of the founding team or founder is obviously the key point in the decision making. What would you say kind of the follow-ons would be kind of in the checklist that are really get you excited about an opportunity?
Yeah, so definitely founders up there. The market needs to be large, right? So you think about typically the businesses that we look at are solving or addressing an issue. So you think about, okay, if this business does ultimately become successful, what does that look like? Is this going to be, you know, $10 million issue? Is this going to be $100 million issue? It's going to be a $100 billion issue. It needs to be large enough that success will create a large enough company, right? So that's probably number 2 on our list. Say we do like to see some form of traction, right? So it can be not necessarily revenue generating, but we want to see users. We want to see the customer excitement around this, and we want to see some proof of concept at least. And then other than that, we really do look for businesses that will drive some sort of positive outcome as they grow. So I think between those, we can dig in pretty meaningfully.
Understood. And I guess the next piece would be preference on kind of investment vehicles. So, you know, whether it's a safe convertible note, priced round, any kind of reluctance or preferences on that end?
It's a good question. We're completely flexible. So typically in the pre-seed seed stage, these are not priced rounds. We've seen probably half and half safe versus convertible notes, but we have, you know, we're flexible based on the company's needs and the founder's needs. So no real preference towards either.
Gotcha. And I know you walked through the PPE story and company that you guys back. So just a little bit snippet on kind of, you know, let's go back, you know, 12 months and kind of how your personal journey, and then a little insight from what you've seen in the VC community, kind of going a little bit quarter by quarter as maybe the belts have loosened up a little bit, but as we've all adjusted to this kind of new working world we're working in here, and how you've seen that for you personally in the fund, and then also just over the overall VC landscape change.
Yeah, absolutely. So I think what's exciting is you think about disruptive technology, right? Disruptive technology is a very, for lack of a better word, it's a great time to be in disruptive technology, right? Consumer behavior is changing. You have people are a lot more open to change and a lot more open to new ideas. So the quick, the nimble, the businesses that can really adapt to that and pivot are the ones that are going to be successful. And that is typically, you know, your younger, more nimble technology companies. So from that standpoint, I think we're incredibly well positioned. And I think any innovative technology that is looking at this new world and addressing the needs of this new world is going to do really well. From our standpoint, I mean, the in-person shift to virtual is definitely something that I needed to or took some getting used to. Obviously, when we were so founder focused and really betting on founders, management teams, and before we really wanted the opportunity to look a founder in the eye, shake their hand, and have that experience, maybe have a dinner, have drinks, get to know them. And obviously, we couldn't do that for the last 12 months. So I think pretty quickly we realized, we can't put this business on hold. And we're going to ultimately need to make investments with founders that we've not met in person. And I think, from what I've seen, the industry as a whole has adapted to that pretty quickly. Certainly, from a investors or LP standpoint coming into funds, it's the same issue, right? It's can we invest in a fund manager without meeting them in person? And the reality is you need to, or you're going to put your business on hold for a very long time. So I've been not pleasantly surprised, but I've been excited to see how quickly that change took place, and I've been impressed as a venture capital industry.
Love it. And I guess the other adapting point, I guess, on that too, is the geographical location of a founder. And so does that matter to you? Do you invest in only US corps? Do you invest outside US corps? Just give us a little picture on kind of how that blend has worked out in the companies you've evaluated.
Yeah, absolutely. So we do look at US based companies. We have in our fund one, we invested in a US corp with the company based out of the UK. But again, really do focus on US based businesses. I think one of the positives of everything being virtual is, we don't need to get on a plane to go visit these folks in other parts of the country. So it's really opened that up from an ability to invest outside of kind of. So I'm based in New York. My partner is based in Houston. So a lot of our deals were coming from those areas. And now we've just seen that open up with a lot more opportunities coming in that we feel comfortable going after, just given this change that would previously be a disadvantage if folks were outside of these kind of strike zones, if you will, given the additional time, effort, and just feasibility of investing in businesses outside of our geographic areas.
Understood. And I know many people have adapted to that, and that goes with the not being able to meet in person, and the location. Does that matter? And as long as the team is built to operate virtually, then that's part of the adapting that you're talking about.
Yeah,
particularly,
and just to add to that, I think that's a really good point. We've had businesses that were virtual even before the pandemic, and just the remote work, the virtual work. I think when you look at very early stage businesses, they do tend to skew more towards that versus a larger business.
Mhm.
So that's something that we've just noticed as well. But sorry to interrupt.
No, please. Really just looking to get back to the audience a little bit here and walk through a few of these questions, particularly around, I guess, the one segment, or I guess 3 or 4, if that. In terms of marketplaces, what are the key investment criteria you look for in a marketplace investment?
Yeah, good question. So
Or give an example.
Yeah, so I'll give you a couple examples. So we invested in a marketplace for sustainably produced clothing. So U.S. retailers can use this marketplace to purchase sustainably produced clothing from global manufacturers. And it's really it's not a whole lot different than other businesses, right? You still need to look at what issue are they addressing, right? So there's a lot of pressure for retailers to buy more sustainably produced clothing or more sustainably produced goods generally. And that is a huge issue that needs to be solved. We have a business that's a marketplace for IT infrastructure. So small, medium-sized, and large businesses now. The process of buying IT infrastructure is very opaque. You go through a salesperson who's not aligned to what the business is looking for, right? Or just incentives are not aligned. So you create a very transparent market for these businesses to look at all their options, see what the different capabilities are, and again, you think about the issue there. Every business needs IT infrastructure. You think about the market there, huge, right? So it's really not a whole lot different than any other business we think about. It's, do they have a competitive edge? Is the management team the right one to solve this issue? And is the issue big enough?
Love it. And I guess diving into the next piece of it, marketplaces maybe around kind of the hemp / cannabis. Do you get involved in that, and cannabis tech? Kind of where does your place come on there, as some VCs have shown a little bit more reluctancy to get into that space?
Yeah, it's a great question. So we have not invested or candidly taken a look at businesses in the cannabis space. And really that's a product of, that's not our area of expertise. There are venture capital funds that do focus on that. And it's just, we would be playing catch up, and we just don't feel like we would be able to add the value that we could to these businesses that we have focused on.
Understood. And when you look at kind of evaluating these businesses, what would you say are some of the most significant indicators of a potentially successful company? I know you kind of probably touched on a few, but like, what are just kind of just readdressing or just kind of picking out a few things about a few companies who have invested in that were like, this and this led us to give it the go.
Yeah, absolutely. I talked a lot about markets. So I don't think we need to talk more about that. I think from a founder and management standpoint, ultimately they need to sell this business not only to investors, us down the road. They're going to need to raise additional capital. So the ability to sell the business to investors, but also to talent, right? So these folks are building out teams. They will be continuing to build out teams, and the ability to be passionate, to bring interest from a capital raising standpoint and a talent standpoint, I think is absolutely crucial. And then I would also add, just the ability for founders to adapt, to pivot, to learn from what's going on in the market. We have again bi-weekly calls with our portfolio companies and founders, and what we love to see is just really open, honest conversations, and no pride of authorship, no egos in these conversations. It's really what does the business need at this point? And the founders that have really been able to open up and have honest, open conversations, has really, in our view, helped. So I think those are some of the key things that we look for.
And that kind of, I think, dives into a little bit of the next one, just kind of the biggest problem you see with, maybe first time or new founders when they're coming to you? What do they get caught up in or with? And you talk about that honesty and transparency. As I was once told, it is a marriage because it lasts longer than the average one. So when you talk about the honesty and transparency, I'm like, that's probably a good start. If we're going to we are partners along this journey with you. So if you want to address that a little bit, and what you see founders getting caught up in, and as a first time or maybe a serial founder that chips up a little bit.
Yeah, absolutely. That's a scary stat, but I guess it's true. So I think the biggest issue we run into is founders trying to be too salesy, right? So, it's one thing to pitch your business. Obviously, you want to shed in the correct light, but if we ask questions and we feel like we're just getting the answers that we want to hear, it's pretty easy to pick up on that. And we really just want that genuine thoughtfulness and not spoon feeding us what we want to hear. So I think just knowing when to be in real sales mode versus not is something that I think a lot of first time founders maybe err too much to the side of pitching, sales, trying to have everything perfect. And at the end of the day, we'll see the business and we'll get an understanding of the business. And I think there's only so much selling you can do.
I want to see your enthusiasm, but if I see you trying to sugarcoat now what's going to happen on the quarterly board meetings, gotcha.
Exactly. Well said, Phil.
I guess the next piece would be a little bit on what is your time horizon for your exits? Has that varied at all, or has that kind of stayed within a certain range? I know you're going on fund 2, so a little light on that.
Yeah, it's a great question. So being early stage investors, you think about, venture capital traditionally is probably a 5 to 6 year hold. We are certainly skewing towards the longer end of that, just given how early we do get in. Something that we've seen in the market more generally is just secondary sales are a lot more common. So there is, if we get in at a seed round, maybe a portfolio company raises Series A, Series B, Series C, and then they're raising a Series D, something like that. There is more of an opportunity than historically to sell at that point. But to answer the question very directly, it's typically, our fund is relatively new. We've been in existence for, I guess, pushing 4 years now. But I suspect we will likely be in kind of the 5 to 7 years hold period, and that ideally it's an IPO or a sale to a large strategic. Right?
Understood. And just diving into that as well, you talk about kind of the impact and social responsibility. How about going into a little bit more on the overall investment capital and where it's going to, and the diversity of founders, and how you guys can really address that issue as a firm or as throughout the community. I know we run an underrepresented founders program to help support 3 CFO hours, but just curious kind of how you've seen that evolve over the last 12 months and how you guys have taken this part in that.
Yeah, absolutely. So we have invested in several women, several minority founders. To us, we really want to invest in the best founders that we can find. And it's not, investing in someone because they are a minority or because they're a woman founder. So we've definitely seen fantastic opportunities from underrepresented groups, and that's exciting to us. Outside of specifically Knightsgate, I actually helped establish a network called Girls Club Capital. And the idea there is you have essentially a platform for women founders to connect with other women founders, kind of a mentorship capacity, and also to connect with potential financing partners. So that's been really great to see that really evolve and take off over the last about 12 months.
Yeah, that's amazing. Excited to hear about that and what you're doing with every front on both different on gender and race and every other piece of the different founders and where the money is actually flowing, as it is to hopefully making more of an impact on that and really the best founders getting funded. Another question from one of our audience is, have you ever done an entire round yourself? Or do you normally always invest alongside others?
It's a great question. We have not done an entire round ourselves. We do really like to have partners that think about the business similarly. Will be able to add value in a hopefully a different way than we can. But I really think you're putting together a team here with investors, right? And you have your portfolio company, but then you have ideally several folks that are on the cap table that can bring a unique set of value adds, whether someone has customer contacts, whether someone knows folks that are interested in a potential future raise. Obviously we take a very hands-on approach from a strategy and operations standpoint, but yeah, we have not taken down a whole round, and that's not something that particularly excites us. Just given the nature of this business, we want partners that believe in this and can help out with us.
Makes sense. And obviously, I think from a founder standpoint, if you're going to have, not have too many people on the cap table, but the right people on the cap table and be able to leverage the relationships within, it makes more sense to kind of have diversified in all rounds versus one true partner. I guess with that too, any uncommon knowledge that you'd like to kind of give as we're reaching kind of the last 10 minutes coming up, that you give to these founders through your experience as they're going through this journey?
Oh, it's a good question. Uncommon knowledge. I think that the first few hires that you make are just so incredibly important and really set the culture of the business, and ultimately they will be involved in making other hires and just really play an integral part of the growth of the business. Mm-hmm. So I think just being incredibly thoughtful about those first few hires is incredibly worthwhile. And we've seen it go both ways, where some founders are maybe not as thoughtful as they should have been, and it comes back to bite them. We've also had founders that maybe take an extra month or two to make a key hire just because they haven't found the right person. And obviously everyone's excited to build out the team, and we all want to grow as quickly as possible. But these building blocks of the company are just so crucial to get right. And I think that would be the uncommon knowledge that I would pass along.
I like it. And I guess going into, say that you were in diligence and you didn't get in the pre-seed round for any reason, as they just kind of closed it out, or there wasn't maybe enough traction quite yet for you to wrap your head around it, kind of what advice would you give these founders to be ready for you the next 12 to 18 months, kind of coming back around?
Yeah. So assuming they did close their pre-seed round, I think it's just focus on the product, get as much done with the capital that you've raised, show that you can be efficient with your capital raise, show that you can really make a lot of progress in a short amount of time. It's a fantastic position to be in when you have raised, right? You can stop focusing on fundraising and put 100% of your effort into the business. And I think it's as simple as that. You got to put 100% of your time into growing the business, making the right decisions, and ensuring that there's really some good progress since from that pre-seed round to the seed round, or the next time we look at it, right? Because that really just sets the tone for this founder, this team, this company can take capital and really put it to good use.
And I guess that goes to another piece too. So obviously, if you come in on the pre-seed investment, you want your founder focused on building the product, building the business, doing all this. But I'm kind of always told never not be fundraising. So you can always be opening up doors saying, hey, we're going to be raising in advance around this quarter, to kind of have this process be less brutal the next time. What would be some advice around kind of rounding the horses in the interest when you're not actively fundraising?
Yeah, it's a really good question, and I've heard that as well. Never stop fundraising or always be fundraising. I think there's some easy things that are not time consuming that you can do, right? You have a list of investors that you think could come in future rounds, and you can kind of shoot them update notes and these quick updates that kind of keep you top of mind, keep you on the radar. But really, at the end of the day, if you are creating a business that folks are going to get excited about, you have a cap table with hopefully venture firms that can introduce you to others, hopefully venture firms that will continue to invest in you as you grow. So I think it's certainly you don't want to go silent, but I would definitely err on the side of focusing on the business and really doing as much as you can there, because if you're creating a really exciting, fantastic business, you will get funding.
Understood. And I kind of like this next question from Paul over here. Can you expand on your investment thesis in climate tech? Do you see fintech as a natural gateway, given climate tech represents a multi-trillion-dollar opportunity?
Interesting. Yeah, so climate tech in particular is one that we're taking a look at quite a few businesses. I would say what we've looked at so far is more on the sustainably produced clothing marketplace is obviously kind of taking out the CO2 emissions from a lot of these processes. I don't think we would go too outside of the wheelhouse in terms of this needs to be a business that we understand, right? We're not science folks by background, and I mean we have advisors that are more focused on that side, but it's really looking at business models that we know and understand that can drive some impact in that space, versus pivoting to a business model that's just completely different than what we've seen. Hopefully that answers that question, but let me know if not. I don't know.
I hope so. I'll wait for the response from that, but I think it covered a good basis of it. Quick one here. Do you invest in tech startups in the African region?
We do not. So we do focus on US based businesses. We did make one investment in a company that has operations in the UK, but they do have a US based corporation that we invested into. So everything that we invest in is a U.S. based business, or
So it can be a U.S. parent, the operating code can be outside, but it has to be a U.S. parent.
exactly.
Gotcha.
Well said. Yes.
And then for Knightsgate, are you looking at any kind of AI-driven software programs relevant to kind of the future of voice interface?
We are actually. That's a very targeted question, and we very much are. So I think AI is an area that's very exciting to us. You think about the scalability of a lot of these businesses, and AI is certainly at the forefront of that. We are looking at a business that is doing exactly what the question is asking. But I think there's just a ton of uncharted territory there, that we're going to see a lot of really exciting businesses come up in the coming years that will be looking to address and kind of leverage the potential opportunities there, or the technology there. So in short, yes, that is an area that we're particularly excited about.
Fantastic. And now I'm going to play quarterback on the 2-minute drill. We can go over, guys. I'm just walking through. I'm going to make sure everyone's questions answered. How would you rate the current market for VC? And the follow-up is, how many pitches do you review a month?
Yeah. So I would say,
What's
up?
It's a 1 out of 10, I guess, to make it easy.
1 out of 10. So I would say valuations are definitely creeping up. I'd say, if I had to give it a number, I would say maybe getting to a 7 or 8 in terms of what we've seen. Obviously, we try to get in very early, but one of the businesses that we invested in, they raised at a $50 million valuation after raising at about a $10 million valuation 6 months earlier. So you can just see people are just really, really hungry and ready to jump in at these deals and willing to drive up the price. In terms of the number of pitches we see a month, we probably get anywhere from 8 to 10 a week. So, and that's just, decks, introductions, etc. So we would take a percentage of that are interesting to us. But you think about, probably 35 to 40 companies a month that we see.
Understood. And I guess I'm assuming the answer is yes to one of these real quick, is on, are you open to provide feedback on a pre-launch kind of ed tech company, ed tech product?
Yeah, absolutely. Yep. If someone has a specific question, yeah, happy to connect and answer.
And then the next one, which I think I've also talked to you a little bit about, is how big does the social mission have to be? Where's kind of the cutoff in the social responsibility when it comes to your thesis? And yeah, if it solves a social issue, but it's not the main focus, kind of addressing that a little bit.
Yeah, it's a great question. At the end of the day, we are a venture capital firm. We have LPs that we need to answer to, and we need to have a financial return. I think what's exciting is you think about the shifts we're seeing in these industries. There's really not a trade-off in my mind between financial returns and social returns at this point. The trends you see they're long-term, they're massive shifts that are not going to go away. And I think we're very careful about ensuring folks understand that this isn't trading one for the other. We really see them as going hand in hand and helping to propel each other. But I think to answer the question more directly, we really do look for some sort of measurable metric that or a reportable metric that we can look at over time. That is a socially beneficial metric. We have invested in businesses that do not have an exact item that we can look at, but I think at the end of the day, it's at the very least, it's not creating damage, right? So the vast majority of the businesses that we will invest in do have that measurable impact. But we can get comfortable with some businesses that maybe there isn't that exact metric, but they're certainly not doing any harm, right?
Yeah, it's just that becoming a bit like at least neutral and can lean positive as they grow in certain areas.
Right.
And be open to that kind of social responsibility and transparency.
Yep. Well said.
Gotcha. Well, I guess with that, I know we hit the top of the hour here, everyone. I'd love to open it up for any final questions from the audience and or our panelist members. We covered a lot here today.
Okay, I guess with that, we can probably wrap it up. And, Alan, thank you so much for joining us today. That was really interesting and super fascinating. So thank you. And Phil, as always, you were amazing. So thank you as well. And hope you both have an absolutely amazing Wednesday. And thank you to our panelists and all of you who joined.
Fantastic.
Thank you,
Thank
everyone.
you so much for
Thanks
hosting.
again, Alan.
Thank you, guys.
Thank you, Phil. Thank you, Gina.
Have a great
Take
week.
care.
Thank you. All right.
Thanks
Bye.
all. Cheers.
Bye.